Hi friends, uh, thank you. Today we are here live discussing on the few important parts of banking sectors. So as already seen, we have to understand what is banking sector in India. Basically, the banking sector has evolved in India from pre-independence, and there was the existence of banking sector prior to independence also. The banking era actually started and the word was derived from the word which was known as a banco. What does actually banco means? Banco means the bench. Initially and earlier the banking system was dealt through benches where the individual persons should stand and used to lend the money to the persons and used to accept the exchanges against that. The process of lending the money and accepting the money in the currency form was known as a banking system. The banking system has evolved over a decade in India. We can see now a lot of private players and private companies who are carrying the banking business in India. However, the first bank introduced and was set up in India was known as the Awadh Bank. However, due to the traditional habit of saving and keeping the money in their own hand has actually led to the failure of the setup of the bank in the Indian system at a very early stage. However, after which the British policy, the British colonies and have introduced the bank known as the Provincial Bank of Madras, Provincial Bank of Kolkata, and Provincially Bank of Bombay. There are three different provincial banks which were established in India. However, later all the banks were merged together and formed the Imperial Bank of India. After the independence and pre-independence, there was one more private banking sector which was established, was known as the Reserve Bank of India. The Reserve Bank of India was the independent unit set up in the early 1930s. However, that particular bank was taken over in year 1949 and it was duly nationalized. And the Reserve Bank of India was given and were assigned with the responsibilities of governing and regulating the other banking sectors in India. However, the major banking sectors which were running in India were already operated by the private and individual players. Looking at the exploitation which were taken places in India before independence has ultimately led and assist the government to privatize all such banks. So finally, the Indian government has moved the nationalization of banking policy, whereby the major banks were nationalized during that period, and the major private players bank was taken over, and the position was taken, and it was declared as a nationalized bank. However, the major portion of Indian population was still untouched by the banking system unless and until there was a huge initiative taken by our honorable Prime Minister under Jan Dhan Yojana. We have to highly appreciate the initiative taken by him to connect the common people to the banking segment. The banking are highly commercial activities. So to understand what are the different type of banks which are operating in India and what are the various kind and categories of banks in India. Basically, there are three important pivots and basic structures of banking in India, which are known as the nationalized bank, scheduled banks, and private and cooperative banks. However, there was a need to establish one of the banks to connect and to provide the benefit to the ruler, which was known as the RRB, Regional Rural Bank. To support the RRB, there was also a body known as the NABARD, which was the constituting body to look after the development policy and finance the development policies or to lend the money to the financial segment of the rural area was known as the NABARD. Hasbi has the body known as RBI to regulate the banking sectors in India. The NABARD was the body which was autonomous body established with the basic purpose of regulating the banking and financial segment in the rural area. Now, what were the scheduled bank? The scheduled bank were those banks which has given the 5 lakh deposit to the RBI were declared as a scheduled bank. Now we have to understand what were the commercial banks. The commercial banks were those banks which were established with the pivot principle, with the basic principle of making commercial business and to earn a profit. However, the cooperative banks were those banks whose ultimate purpose was to give or to carry a welfare of the people at large. So, scheduled commercial banks were those commercial banks which were carrying a business with a commercial interest and to gain the commercial profit. And they have already deposited a 5 lakhs to the banking sector. Thank you.